Hi friends, welcome to my YouTube channel Learn Commerce with Namita. I'm Namita Mane. In today's video, let us solve an example of income from house property. So basically this example was asked in SPPU examination April 2023 class TYBCOM semester 6. The marks for this example is total 7 marks. So the example is compute income from house property of Mr. Ramesh for the assessment year 2023-2024 from the following particulars under old regime. So we have to compute income from house property for Mr. Ramesh. The assessment year is 2023-2024. Now what are the particulars given? Interest on loan is given 40,000, municipal tax 6,000, vacancy period is given, the house property was vacant for 2 months, then there is unrealized rent 10,000, then annual rent is 2,40,000, standard rent is 2,30,000, fair rent is 2,50,000 and municipal value is 3 lakhs. From these particulars, we have to calculate the income from house property for Mr. Ramesh. Now to calculate income from house property, first of all you have to prepare the statement showing of income from house property of Mr. Ramesh. So this is the particulars we have to uh, take these points into consideration for calculating income from house property. Now we will solve this example by step. Okay, so the first step is what? Find the maximum value of the following. First step is what? We have to find the maximum value, which will be called as what? Expected rent. Now to find a maximum value, we need municipal value and fair rent. Okay, so the municipal value, how much is the municipal value given? 3 lakh rupees. So in front of municipal value, write 3 lakh rupees. Okay, so municipal value we have note down, that is 3 lakh rupees. Next after that is fair rent. Okay, the fair rent is 2 lakh 50,000. Fair rent 2 lakh 50,000. 2 lakh 50,000. Now from this two, municipal value and fair rent, we have to find the maximum amount. Now from this two, we have to take the maximum value. Municipal value is 3 lakh, fair rent is 2 lakh 50,000. So the municipal value, that is 3 lakh, is the maximum amount. We will take that. So in the maximum amount, write 3 lakh rupees. After that, in the first step only, we have to find the minimum of the following. Now minimum of the following is what? From maximum value amount and standard rent. Okay, from this two value, whichever is low, that amount we will take, and that will be called as what? Expected rent. Okay, so maximum amount, how much we got? 3 lakh rupees. So 3 lakh rupees we have taken. Then what is the amount of standard rent? The amount of standard rent is 2 lakh 30,000. Okay, so 2 lakh 30,000. Now from this both the values, whichever is low, whichever is minimum, that is called as expected rent. So maximum amount is 3 lakhs, standard rent is 2 lakh 30,000. So standard rent which is less, that will be called as what? Expected rent. So 2 lakh 30,000 is the expected rent. So first step, we have got the value of first step, that is expected rent is 2,30,000. Now second step, step number 2. The step number 2 is what? Find rent received or rent receivable. Okay. So to find rent received or receivable, what is there? First in that, adjusted actual rent. Okay. That means annual return, annual rent minus unrealized rent. Okay. So now here, see here, how much is the annual rent? Annual rent is 2,40,000. Annual rent means for particular for 1 year the rent was 2,40,000. From 2,40,000, that is what? Annual rent less unrealized rent. So there is unrealized rent, the amount is 10,000. Okay. So annual rent 2,40,000 minus unrealized rent is 10,000. Okay. So what is the remaining from 2,40,000 less 10,000? So remaining is 2,30,000. Okay. Clear? So from where we got 2,30,000? Annual rent minus unrealized rent. 2,40,000 less 10,000. Okay. So step number 2 we got, that is rent received. So actual rent received we have received as 2,30,000. So step number 2 is completed. Now step number 3 is what? Compare step 1 and step 2. From comparison, whichever value is higher or more, that we have to take as step number 3. So step number 1, value of step number 1 is 2,30,000 and value of step number 2 is 2,30,000. Now both the values are same, so we will take 2,30,000 as step comparison between step 1 and step 2. So 2,30,000. Now from step number 3 that we have got as 2,30,000, step number 4 is what? Less the loss due to vacancy. Okay. So from 2,30,000 we have to uh, less the loss whichever we have occurred due to due to vacant house. Okay. So now see here in the particulars, the vacancy period is given. Okay. So vacancy period is what? That the house was vacant for 2 months. Okay. That means for that 2 months the rent was not received. Okay. So here we have to less from the 2,30,000. Now see, for 2 months the house was vacant. Okay. So what will be the loss for that 2 months? How to find that? Now see, annual rent is how much? 2,40,000. Okay. Annual rent for 12 months is 2,40,000. First we have to take the annual rent. From that we have to divide it by 12 so that we will get for per month what is the rent. So 2,40,000 is the rent for entire 1 year. So 2,40,000 divided by 12, 20,000 we get. So 20,000 is the per month rent. Okay. So for 1 month the rent is 20,000. So 2 months the house was vacant. So 20,000 multiplied by 2, 40,000. Okay. So 40,000 is the loss due to vacancy. So 40,000 is the loss due to vacancy. Clear? Now from step 3, less step number 4, that is 2,30,000 minus 40,000. The remaining value will be called as gross annual value, that is 1,90,000. Okay, 1,90,000 is the gross annual value. Now from this gross annual value we have to less the municipal tax which is paid by the owner. So municipal tax is how much? 6,000. Okay, and it is paid by the owner. So 6,000 is the municipal tax. So from an gross annual value, that is 1,90,000 less the municipal value. Okay, 1,90,000 minus 6,000, the value remaining is 1,84,000. Okay, so 1,84,000 is called as net annual value. Okay, so how did we get net annual value? From net annual value is equals to gross annual value minus municipal tax. Okay, so total remaining we get 1,84,000. Okay, now from this annual value we have to do net annual value, we have to do the deductions. Okay, so standard deduction under section 24. So under section 24 we have to do the standard deduction of 30% of NAV. 30% of NAV means 30% of net annual value. And what if there is any interest on loan, that is to be reduced. Okay, that is to be less. These two are as per the deductions under section 24. Okay, so first is standard deduction under section 34A, that is 30% of net annual value. So how much we have got net annual value? 1,84,000. Okay, so 30% of 1 lakh 8 1,84,000, we get 55,200. Okay, so 55,200 is the 30% on net annual value. 55,200. Okay, now less the interest on loan. So interest on loan is how much? 40,000. Okay, so from 1,84,000 less 55,200 and 40,000, remaining we get 1,84,000 minus 55,200 minus 40,000, remaining is 88,800. Okay, so 88,800 is the income from house property. Okay, 88,800 is the income from house property. Okay, so in this step, by this method we have to calculate the income from house property. Okay, so follow this step so to calculate income from house property. Okay, so I hope you have understood this example. Thank you very much. Please subscribe my YouTube channel, like and share the video, and do not forget to press the bell icon to get the latest notification.